And so how do you value gold? Well, today, the government debt in the U.S. is backed by about less than 2% of gold reserves. Okay. This is valuing gold at today's prices, not the ridiculous, $40 an ounce that we hear from the Treasury, from the Treasury secretaries. So what I think it's likely to happen if you just revalue at more appropriate levels, let's say 10, 15%, which we saw back in the 70s, you get a gold price somewhere close to $20,000 an ounce or so. If you get it closer to the 40%, which is a very extreme number, you get it close to 50,000. So things are fluid, of course, but that gives you a sense that, this metal is really cheap at $3,000, $3,500 an ounce. I think the problem with price targets is usually that as you see things moving in your direction, the price target could change. And so that's the biggest concern is how the whole factors you're using to come up with that price, may change over time. I will explain one example of that. For instance, a lot of people use monetary base to try to price gold. What if monetary base, in 5 years, it starts to contract for whatever reason? I'm not saying it will, but, then it changes the completely of your picture of your target price as well. And so I'm just giving one example. There's a lot more other factors you can use. I used monetary base before, and I don't think it's very reflective of the gold price just because it's a small number of what the dollars available out there. I try to use M2 money supply, but money supply, which is a broader way of looking at the amount of money available in the system, also does not reflect very well. We're about $20+ trillion in the US, of which it's not really reflective of all the dollars that are floating around. And then I use the government debt. Government debt is a really outstanding way of maybe looking at this, because that's, that really is majority of the dollars out there. So you've got about, just to make it math simple, about 35 trillion, more like 36, but $35 trillion. And then you look at, all right, well, $35 trillion, we revalue gold at its price today, how much gold officially the U.S. government has. We may say that the government securities are backed by military and other things, but ultimately is really backed by gold. Ultimately, whoever got more gold their currency will be valued, better accordingly. And so I thought that was the best way to look at. And, back in the 40s, running, as we were getting into the Second World War, what we saw was that we were about 40% of the government debt was actually backed by gold. Well, that's remarkable. And then, as we saw money supply and debt creation in order to enter the war, that ratio declined, to, 20% or so, or 30%. And we enter a downward trend of that. In other words, government debt has been rising at the same time as the reserves actually were sold before the break of the gold standard and after the World War II. And since then, we've seen gold, reserves being basically static, at least as far as we know in the U.S. And so how do you value gold? Well, today, the government debt in the U.S. is backed by about less than 2% of gold reserves. Okay. This is valuing gold at today's prices, not the ridiculous, $40 an ounce that we hear from the Treasury secretaries. So what I think it's likely to happen if you just revalue at more appropriate levels, let's say 10, 15%, which we saw back in the 70s, you get a gold price somewhere closer to $20,000 an ounce or so. If you get it closer to the 40%, which is a very extreme number, you get it close to 50,000. So things are fluid, of course, but that gives you a sense that, this metal is really cheap at $3,000, $3,500 an ounce. Of course, things move too fast in a quick direction. We can see a correction here and there, but that gives you sort of that, light at the end of the tunnel of where we could get. And who knows if 10, 15 years from now, we're going to see debt at 36 trillion. We could see a 40, of which would increase my price target. So that part is fluid, both sides. I do, and it wouldn't shock me at all if it's the Treasury in the US that is buying gold recently and driving the metal price higher. The main reason for that is because if you look at what the measurements that they can do without using the Federal Reserve in order to manipulate interest rates lower and using the Treasury buyback system, what they need is cash in the TGA account. The TGA account is just a Treasury cash balance. And in order to improve that cash balance, what you need to do is to have more collateral. And so gold prices are still valued at ridiculous low level, historically speaking. And so if you revalue gold, let's say in a few months, the change that it does is that it increases the collateral value, increases the value of your cash available to do things. And so, of course, the government's thinking about that as a potential change in things. And it wouldn't shock me at all if we see a revaluation of gold later. And in order to do that, they also probably want gold prices to be much higher in order to allow them to have even more capital to be deployed in other things. And so what I find it fascinating, and it's not against the crypto space, but it really is amazing to me that people have such a high conviction on crypto and all that. And when they hear that the treasury is likely to be building a position in Bitcoin and other things, look, from my understanding, if a large party is really interested in buying something, they don't announce it to the whole world. They buy it and they announce it. And so the fact that we have not announced to the world that we're doing something on gold is extremely bullish. They know the value. I mean, Scott Basson's, biggest position in his hedge fund was what? Was gold. And the same goes for Donald Trump. He knows the value of gold. Everything that he builds has got gold everywhere. I mean, it's pretty obvious that he likes the metal. And so I do think, and he tweeted recently, he who's got gold has the upper hand on negotiations, something along those lines. I'm paraphrasing what he said necessarily, but he's right. And so I do think that this accumulation of gold from central banks is the U.S. is going to likely to be part of this as well. It has to become part of it. It has opted out of this accumulation of the metal recently, but international central banks are at a 60-year highs in gold reserves today. And the U.S. is at a 90-year low. So they better get cranking here.